Hi traders, welcome to Monetize. In today's video, I'm going to share two trading setups with you. The first one is about GBPJPY. Let's check from the highest time frame, which is weekly. I'm not checking monthly here, I'm directly going to weekly. As per weekly, this was the swing low. So market cleared the lows, means it reached to the area, to the previous swing low, collected some orders and then started going up. So the new cycle, the new bullish cycle started from this area, and you can notice lower low formation with higher lows on MACD, a bullish divergence. So because of this bullish divergence, a new bullish cycle had started. I'm going to check on the Fib extension the levels which it was expected to reach, and as per the smaller cycle, I'm going to change the colors. So this was the Fib duplication zone. That's around 169.25. To round off, we can say 170. So it was expected to reach 170, but it lost momentum prior to that. It could not reach 170 and it formed a bearish divergence. A bearish divergence because a series of higher highs as per the weekly chart. So starting from this high to the recent one, you can see MACD lines are going lower high on the MACD lines, as well as if you can see in the latest part, the recent cycle, almost equal highs and lower highs on MACD histogram, even lower highs on MACD lines. So we have double bearish divergence on the weekly time frame. I'm switching to one time frame lower. The double weekly is visible on daily as well. It made equal highs, which is double top with a bearish divergence. After that, the market bounced lower. It tried to break the previous high, but it could not. As a result, it started melting downwards. Now, if I'm going to mark my structure based on this daily setup, let's change to a line chart. So the structure should be this high followed by this low. So we can expect at least a touch of 156.81 because this is the structure low, which is coinciding with some previous Fib extension numbers levels. Also, if we are going to check on the Fib retracement from the swing low to the recent swing high, we'll get some additional confirmation. So as per Fib retracement from the swing low to the recent swing high, if we can expect a 50% retracement, then it should reach the levels of, it should reach the level around 150, 151. So the 50% retracement level is here, which is also Fib extension 100% level of the previous bullish cycle. So a duplication zone is here. So in the longer run, because it's a weekly bearish setup, so it may take few weeks to reach the target, but definitely the destination is around 151 to 150 here. I'm just going to clear all the lines to check what's going on 4-hourly. Let's clear the drawings, and on the 4-hourly, if I'm going to mark the structure, so it has already broken below the structure level. Now if we plot the February trend from the recent high to the recent low, we can expect a push towards 50 to 61 area and then continuation lower. So the plan is to sell on the rise. We can also mark a falling trend line for our reference, starting from this swing high. So it may help us to get the second confirmation. So it may touch the falling trend line, it may break above to make a false breakout and then continue lower. Let's check on the lower time frame, which is 1-hourly. On 1-hourly, this downward pressure is now decreased because of the bullish divergence coming in play. So we have a clear bullish divergence, higher low on MACD histogram and lines, and lower low on the chart. So we can expect this push higher. So because the higher time frame, the multi-time frame synchronization is towards the downward side, weekly is bearish, daily is bearish, even 4-hourly is bearish. So if we are going to trade it for this upward move, it's going to be an aggressive setup. So please trade cautiously. I'm just going to drop to 15 minutes to validate if we have a buying setup or not. Yes, 15-minute also got bullish divergence, a lower low formation and higher low on MACD histogram and MACD lines. So 1 hour and 15 minutes are good to trade for the upside. I just need to check the break of recent structure. So as per the rules, this is the low, and the first structure which was required to be taken out was yes. So it has already passed above. It clearly broke above the structure. Now we can wait for the pullback, and if we are going to use our Feb retracement, assuming we have a structure here, the high here around 160, somewhere here, I can just assume until it is completed on the charts. So any which ways, we can expect a retracement based on 15 minutes pullback, and we can validate with buying opportunity somewhere around 61 to 78 or in between 50 to 61. But please keep in mind, it's going to be an aggressive trade because the higher time frame is going downward. It's showing bearish pressure. Now I'm going to share with you the second setup of the day, which is Euro GBP. Euro GBP, yes. Let's start from the weekly. So on the weekly, it cleared the previous low, made a false break, and then pushed higher. Also, if you notice, after making a false breakout to the lower side, collecting sell orders, it also created bullish divergence, a lower low formation with higher low formation on MACD. So once we get a bullish divergence, the next step is to validate the breakout of the structure, turning it to a line chart and lowest point, second lowest is here. I'm going to mark the structure, first line and the highest line of the structure. Ultimately it broke above the structure, and now we are marking the retracement from the lowest to the highest, and as per the rule we should get a buying opportunity somewhere between 61 to 78. The first opportunity could have been in between 50 to 61, which we did not get. Now the second opportunity should be around 61 to 78. So now we have the plan. We are looking for the buy setup on the weekly. Let's go to one time lower. On one time lower, that is daily, we still do not have anything bullish. Sideways consolidation, maybe collecting of orders in this zone, so it may keep on ranging for a while and then a final push lower. What happened to the markings? Okay, so it may keep on ranging in this area for a while and final push lower to collect the sell orders. Break of 78.6, maybe a false breakout, and then immediately a push higher. So this would be the validation for our buying setup on daily basis. If you want to check it further, we can go to 4 hourly, removing this. Yes, so on 4 hourly we may get a bullish divergence, we may get a new low, highly anticipated. MACD will turn red again, but it would be a higher low, sorry, and it will complete its own bullish divergence in this area, then push above, a steep rise to break above the structure. That would be the validation of buying setup, and we can buy from this area. And the target would be on the basis of weekly. So let's go back to weekly. If we buy somewhere here around 78, you can protect your stop below the recent low, and even if you target the previous high, the risk and reward is awesome because you'll be getting around 2.7%. So by risking 1%, you'll be making around 2.7%. So I hope both these setups are clear.